The government remains shut down at the time of this recording. We're going to talk about what this means for real estate in this month's Market Update.
The Fed meets at the end of October. Markets are anticipating another rate cut, and we'll talk about what that means for mortgage rates.
And home sales are trending up, while mortgage interest rates are trending down. We'll dive into the details of what may lie ahead.
All that and more on this month's Market Update.
Welcome to this month's Market Update. Please remember to click like and subscribe if you find our content valuable, and be sure to share this episode with a friend. Joining me here today is once again Ruben, my co-host. Ruben, how are you?
Good, Gabi. Good to be here.
Yeah, it's been a quick month, and we certainly have had several updates between the last recording and this one.
Yeah, plenty to talk about.
So let's dive in today.
So, government shutdown, right? What are the things, we all need to know? A lot of you all have probably already heard this, but there's really only a handful of primary things directly affecting real estate, right? The most obvious one is the national flood insurance plans, right? So right now you cannot get a national flood insurance plan. So if you're in a coastal area or flood area in general, it's complicating deals, right? There's other ways to go around this. There's private insurance policies. Some of these policies are also assumable, but it's creating more steps, right? So it's slowing down closings, creating more steps with buyers, maybe even creating some hesitations with sellers that know that that's going to be a challenge if they list now. So more conversations have to be had, right?
So what does this mean for someone who's currently under contract? Is it as simple as needing to wait?
No, it's not as simple as needing to wait, because there's other options, right? Depending on your lender, depending on whether the other party has an assumable policy, depending on pricing for a private insurance policy is another option. So there are workarounds that can keep your closings probably on track, I would think, but they're not necessarily super simple. But they exist. People out there are doing them at a high level right now. So if you're in an area that's coastal dealing with these floodplains, you've probably already started to come across this. But definitely something to kind of educate yourself on, kind of how to deal with it.
So it's not that somebody couldn't close. There are a variety of ways that it could be done, but talking to the professionals in the insurance space will be very important for those who do need to close. What are some of the other situations that are happening because of the government shutdown?
Another one is USDA loans. That's fairly small part of single-family home lending. They do upwards of 30,000 homes a year, but in the grand scheme of our 5 million units that close in a year, that's relatively small. But if you're in a rural area where those loans are more common, because those loans are specifically usually applied to areas that are outside of cities. The federal government, they draw a map. If you're outside of the exclusion zones around cities, you have the option to apply for these loans. They're not happening at all right now. So that's a tool for a lot of home buyers in rural areas that's just not available during a government shutdown. So that's another big thing that's out there right now. Another part of it is the IRS is not entirely shut down, but if you need to get income verification through the IRS, that's probably a more arduous process right now.
Yeah, I would imagine that may have an impact on military professionals that may need a loan as well.
The good thing is VA loans, I believe, are still happening. FHA loans are still happening. So that may be delayed some because they're shorthanded, but FHA loans are still going through. It just may take longer to close than previously, just getting all the documentation in line. The other thing that is notable is that conventional loans, Fannie Mae, Freddie Mac, are not impacted. So if you're doing conventional mortgages, they shouldn't be affected by the government shutdown. There may be some rare cases where for some reason something needs to come from another government agency that is in the shutdown that could create delays. But for the most part, conventional mortgage should be fine.
So it sounds like overall we might start to see that slowdown of closings happening because of some potential delays based on the type of loan that folks are receiving.
Yeah, you're definitely seeing it now in markets that are dealing with the insurance issues and places that don't have USDA availability anymore. It's just creating complications, right? There's less tools available. There's less people available to help when you need something if it's going through one of these agencies. So it's out there. We've been dealing with it for, as of this filming, 3 weeks. We'll see how much longer it lasts. In the end, it's really, in a lot of cases, pushing these deals down the road, right? It's not necessarily going to end deals. It's not going to prevent people from doing deals. It's just going to prevent them potentially from doing deals until they can resolve whatever issue is requiring some input from a federal agency. So delays are really the story right now inside of real estate. as far as the impact on this. In terms of demand being impacted, if you are in a city where there's a lot of federal workers, it may impact demand some in the short term. But as of, basically the third or fourth week of October, people are going to be missing paychecks potentially. So the longer we get out, the more that piece of it becomes an impact. The more checks people miss, the more income's not getting paid to people, the more those cities are impacted on the demand side of things. So far, that's probably relatively minimal. But, if we're still here when we talk next month, that's going to be a bigger issue.
Speaking of delays, the Fed is meeting next week, and the Fed is missing some data right now.
Yeah, that's right. All economists are missing some data right now.
That's right.
As of the government shutdown, the BLS, the BEA, basically government statistical agencies that we rely on to collect data on the economy to help us understand what's going on, are all closed right now. So that data is not being aggregated. It's not being released. That'll probably impact conversations at the Fed. There are some private data sources, and they're right now supporting a very similar narrative to the one we saw play out in the last Fed meeting. So essentially, continued weakness in the labor market, but still some concerns a little bit on the pricing side, the inflation side of things. So, ADP released their job number showing a decrease in jobs of over 30,000 jobs in September. That's certainly concerning. And those two numbers, that number does tend to trend in the same direction, at least, as the number the BLS releases on employment figures. So that's something the Federal Reserve will probably be looking at. The number of job openings, and you look at Indeed.com's, the data they release on the total number of job postings there has also continued to trend down over the last month into October. So that apparent weakness that's been kind of driving the Fed's decisions to start lowering rates is very much still there in the data that we can't see. You're also starting to see wages start to slow down, particularly in lower income brackets, another thing the Fed's going to be looking at. So essentially that's all to say it's looking like the Fed's going to get us another 25 basis point decrease at the end of this month. This will air after that. On the off chance that they don't do that, which would be a surprise, we're going to see some things happen. So if for some reason we don't see that dip, I would expect to see a little uptick in mortgage rates and things like that. Probably markets will have a moment as well in terms of the stock market and stuff because people don't like surprises from the Federal Reserve. All that being said, though, very much anticipated right now, another probably 25 basis point decline. That will all be baked into the mortgage rate by the time we get there. The uncertainty around that does exist may mean that we'll see mortgage rates trend down a little bit more afterwards. But we've already seen a well-defined downward trajectory in mortgage rates. I think the last time I checked, we're about 6.15. If you talk to people, there are ways right now that you can get below a 6% mortgage. It's been a while since people were going to have the options without substantial buy downs in rates, right, to get below 6%. So
it's also a good reminder for those who are currently looking at conventional ways to get a mortgage. And as we talked about a couple of months ago, new construction, home builders may have some special incentives and lower rates as well. So for our viewers today, that may be something to consider if new construction is an option in the area.
New construction, speaking of, we saw in their last release, which is here's another statistic we haven't gotten, is we don't know what new home sales did yet for the previous month. But the month we did have the August new home sales, we talked about this the last time, we saw a little bit, almost a 20% jump year over year in contracts signed. So like we've mentioned before, new home sales are recorded at contract signing versus existing home sales are recorded at closing, right? Mm-hmm. So just to kind of move into what's going on with housing, we've now seen in existing home sales positive movement, right? This past month, we saw a 4% year-over-year increase in existing home sales. That's good. We're starting to see the impact of these lower rates. Inventory is continuing to rise, interestingly. We're still at 4.6 months of supply, but we moved to 1.55 million in terms of this. We went from 1.53 to 1.55, but typically this time of the year, it would be relatively normal to see inventory kind of starting to trend down. So the fact that we saw essentially a flat number of listings at the end of the month points to the fact that these low interest rates are probably also impacting supply to some extent. In the market we're in right now, a lot of our buyers are sellers. So if you're being motivated by lower interest rates to become a buyer, there's a decent chance you're also then turning around and having to list your house as part of that process. So it's going to be kind of interesting to see how that side of this plays out over the next quarter as rates have trended down, to see how supply keeps pace with the increase in demand. I suspect it'll be a little different than we've seen in the not so distant past, where we've seen more and more buyers and not very much supply follow them. I think in this instance, we may see supply and demand kind of move together as rates come down, at least in the beginning, because of the fact that the people who can afford to buy right now, even though rates are trending down, affordability is still relatively poor, right? So as the rates trend down, the people who are looking to buy are also going to be sellers. They're homeowners, right?
Right.
So I think we're going to see a kind of a balanced movement in supply with demand, which is going to keep the month supply elevated and probably keep price growth relatively muted. Like we're seeing right now, we saw I think a 2% year-over-year increase in the median home price this last month, even with sales turning positive again. So I think as we go forward, 2 to 4% is probably going to be relatively normal. We may even see lower than that some months, depending on what's happening with mortgage rates and demand.
Well, it also seems like if that's the way that the winds are blowing, and conventional buyers are the ones who continue to notice that their interest rates might be going down, with supply continuing to maintain relatively balanced, this could be an incredible opportunity for those who are making a purchase going into the next 90 days, 120 days, to be able to make a great move. It could also mean that real estate professionals are in for a potentially busier first quarter between the pent-up demand and what is happening with supply.
Yeah, I think we're going to see improved sales in Q4 and probably going into Q1 as the trend in mortgage rates holds. Further out, it gets a little bit cloudier, right? Because one of the things that the Fed that's driving rates down right now is uncertainty about the overall economy. And if we see some deterioration in the macro economy and employment, things like that, that'll eventually start to hit housing. Where we're seeing the most weakness right now is in lower income brackets. So the housing market, which is more the demand side of it's more defined by higher income earners, isn't as affected right now. It's going to benefit mostly from lower interest rates. The more persistent this labor market issue becomes, the more we get out, and if it's still an issue, it's eventually going to find its way to the housing market, right?
Yeah, it's like a pyramid. The way is how I'm envisioning it, because it's at the very bottom, right? It's the largest population, and it is the foundation of our economy.
Yeah, that's right. Like, people's spending in general across the economy is what drives it, right?
Yeah.
So as more of those people are struggling, eventually everything could slow down some. And that's eventually going to hit the housing market, right? Those layoffs will start to spill into the higher earning jobs eventually if we get in a situation where we're consistently seeing the labor market weaken. Now, that's the opposite of what the Fed wants, right? That's why we're cutting rates, is to avoid the labor market continuing to deteriorate. Hopefully they're able to get ahead of it. The challenge they face is that we are also having some issues with inflation. That's sort of the question right now. Another place we don't have a lot of data on. But for the most part, I think we're going to continue to see the Fed lean more toward preventing continued increases in unemployment.
And here might be the good news, right? If you are currently a conventional buyer, just to bottom line it, this is your time to get with your real estate professional. And real estate professionals, if you have those buyers that have been pre-approved for conventional mortgages, get with them and follow up consistently to make sure that they're clear on their search criteria and taking advantage of this market of the moment.
Absolutely. Like, people should take advantage of the fact that rates are coming down right now. Nothing's guaranteed, so definitely it's advantageous to lock rates when you can get them, right?
Well, Ruben, at this time, the government remains shut down, yet the good news is that we are seeing a positive trend in existing home sales and a trend down of mortgage rates.
Yeah, so I think we've got some bad news and some good news, right?
Right.
So hopefully next month when we get together, the government will be back to work and we won't have to talk too much about that anymore. But yeah, I think mortgage rates are going to continue to trend down. I think that's going to create an opportunity for a strong Q4 for everybody in the industry. I think going into Q1 as well. So, some upside right now. We'll see kind of how things play out with the Fed and the economy. Hopefully they're able to keep us in a good spot.
Yeah, you and I will certainly be leaning into the meeting next week, and hopefully in 30 days we will continue to have positive news for all things real estate.
Yeah, and some more data.
That's exactly right. Thank you again for tuning into this month's Market Update. If you have comments or one or two questions, put them into our YouTube channel and we might just answer them next month.
We'll see you then.